Now, I've spent almost my entire adult life in commercial real estate investments and finance. And after the last downturn, the global financial crisis of 2007, 2008 or so, a few years later, I actually reinvented myself and discovered digital marketing, putting two and two together with the Jobs Act of 2012 to raise capital for real estate sponsors. And an old friend, Max Sharkansky at Trion Properties, was my first client. And actually, this is how it happened. We were having a conversation about raising money from institutional investors. And I asked him, why don't you try and raise more capital? Because he'd been doing it already online. Why don't you try and raise more capital using crowdfunding? And I told him we'd build a system out for him. And Max asked me if I'd ever done it for a client before. And I told him no. And he said, all right, you're on. Right. So Max Sharkansky, thank you so much for being my first client and for starting me on the path to where I am now. And today, I'm very happy to introduce you to Andrew Lucas, who is Trion Properties Director of Capital Markets, and with whom I've had the great pleasure of building out an investor acquisition system over there at Trion Properties. This is Adam Gower, and welcome to the Gower Crowd podcast, syndication in the digital age, where we examine all aspects of raising capital online for commercial real estate. Now, what you're going to hear from Andrew today, who is at the sharp edge of investor acquisition, right? So what we do doesn't eliminate investor relations, it facilitates it. And what Andrew talks about is how it actually advances the investor journey by 50%, right? So what that means is that it takes half the time to convert a prospect to being an investor, or that you can do it twice as fast. And this whole thing is based on a system that I've developed where investors find you, not the other way around, and end up wanting to invest with you before you even ask them. And so to find out more about how to do that, sign up for my newsletter at gowercrowd.com and be sure to go to the podcast page for today's episode for links to Trion and to Andrew. All right, now it is my great pleasure to introduce you to Andrew Lucas, Director of Capital Markets at Trion Properties. And by the way, the sound quality is not the best, unfortunately, in today's episode. So be patient. It's worth listening to as Andrew tells actually all the secrets that he has learned before we started working together, and that were just amplified in their efficiency when we did build out the system for them. All right, so here is Andrew. Andrew, what a pleasure it is to see you. Thank you so much for being on my podcast. Now, I have a question for you. Having built out a digital marketing platform for Trion Properties, what I'd like to explore with you today is life before and after that transition. So let's start first with what you do. You're a professional investor relations guy, right? Tell me a little. It's important to understand your background and your background raising capital and what you used to do when you first started raising capital for sponsors.
Sure. Yeah, so my role here at Trion Properties is, my title is Director of Capital Markets. And what I do is I with, assistance from the two principals, Max Sharkansky and Mitch Passover, I oversee the capital raising and investor relations vertical. So it's my role in the company to find new investors, nurture new investors, nurture potential investors, so ultimately they have the confidence with us and the knowledge to make wise investment decisions. Just to kind of back up my career, I've right out of college, I was fortunate I did some traveling, then went into residential real estate, did purchase mortgages for one of the large national home builders back east, and then moved out to California in 2010 and got into the brokerage side of multifamily real estate. So I did that for about 2.5 years. Then I was in the process. I was actually sourcing a bridge loan for a client, and I started speaking with a company called Wilshire Finance Partners to potentially place the loan. And I was speaking with the CEO there, and they were in the process of launching 2 new real estate debt funds, and they were looking for somebody to come in and help launch those funds, help grow those funds, and really raise capital for those funds. So I moved over there in 2013, and that's how I got into the capital raising, investor relations side of the business. You know, from where I was when I was there versus you know, where we are at Trion right now with a fairly robust infrastructure is completely night and day.
All right, so let's talk about that a little.
Sure.
So let's just drill down. So you started engaging with investors when you were at Wilshire. That was the first time in your career, and that was, you said, about 10 years ago. Is that right? About 10 years.
That was in 2013. So that's when that's when my role at the company was to find investors.
All right. So what was that? Describe that process to me. When you just remember, right? It's a new career, new job. How did you do it?
Yeah, that was not, you know, it was very difficult. So they actually built the majority of their investor base via radio advertising, which today, for those of you who are listening that are in the LA area, I believe it's KFI, it's at 640. And we did advertising on that channel. So, you know, it was effective, but it was very expensive.
So how did that work, Andrew? That's actually really interesting to me, because I remember speaking to Harold Hofer, who was one of the co-founders at Rich Uncles, together with Ray Werter, who was chairman at CBRE. And he told me the same thing. The best source for them originally in getting investors was radio advertising. But what I'm interested in learning from you is what did the investor journey look like, right? What was it like for you inside Wilshire when the broadcast on your drive-in in the morning, you hear this advert? Yeah. What happened next?
You know, it was fairly unsophisticated in terms of of tracking, essentially. You know, we would advertise our phone number on the radio, and somebody would call in, and you know, I knew what times the ads were running. So if they were running at 7:30 at night, I'd be at the office late that night. And it was one of those things. If somebody called and they left a message, and then I called them back, I may not connect with them. So like, you really needed to be there when the phone rang. So if you compare that to kind of, and all of our, at that point, we were a relatively small shop. So we didn't have some sophisticated lead tracking or automatic follow-up drip campaigns. It was pretty much, I try to answer the phone, right, and then I'm email following up manually. So it wasn't, an extremely sophisticated. It was effective, and it did work. And then ultimately, you know, we did get to the point at Wilshire where, you know, we had a decent investor base, so we started to get investor referrals. And then, I mean, I did a lot of cold calling as well. So at Wilshire, I you know, with some success, you know, I can't say it was a tremendous success, but we were able to crack the registered investment advisor space, because our real estate debt offerings were pretty conservative. There was a stable net asset value. They had consistent monthly cash flow. So I would say it's you know, you could pitch it as a lower risk fixed income investment. So that was a bit more, you know, that had some attraction to the registered investment advisor community. But
what you were doing though, that you were cold calling. So you had a list of RIAs.
Oh yeah. So there are a couple of databases called, oh gosh, I don't even remember, Discovery Data. Then I believe there was RIA. I don't recall off the top of my head, but there's a couple databases essentially that aggregate all of the investment advisor information. So you could say, okay, does this person allocate to alternatives? Do they allocate to private real estate? And then you could even, so, you know, like at Trion, we've been able to get our fund on the TD Ameritrade and Fidelity platforms. At Wilshire, we were able to as well. So you could actually search to see what investment advisors use which platforms.
But what you were doing was you were looking at you were narrowing them down by interest, and then you were literally dialing,
picking up the phone and dialing for dollars. And,
what was that like? So what were those conversations like when you had those? Like the guy answers, yeah, I'm Joe, RIA, how can I help you?
You know what so what I primarily would do, so I would do some straight cold calling, but then we bought databases, and then we would start, we would include, there were RIAs that would opt in to email lists. So we would send out an email with like our earnings report. And then what I would do is we may send it out to 20,000 people. And then I would click on, our email system would score them. So I could see who opened it the most, or who clicked on the email the most, or who spent the most time reading the email. So then I would call the 100 people that, had a lead score over X, Y, or Z. So I was able to pick up some business like that. It was fairly low probability, but
I was going to say, so out of 100 calls that you make, because I know you're an incredibly hard worker, Andrew, we've worked together, it's been a pleasure. Out of 100 calls, I can't imagine. This is what I used to do as well, in a different way, completely differently. But how many hits would you get, you figure?
I mean, it would depend. To be honest, I went from the brokerage community making 100 calls a day to selling a short-term fixed income investment that, in my opinion, had a lot of merit. So I actually I thought selling a product that was tangible, and that, just like the Trion, I believe if somebody is interested in investing in real estate and wants what we're offering, I'm not saying we are the best company in the world, but I truly believe investing with us is a wise decision. So, for me, the transition of selling a service where, I know there's a lot of people that, that have a lot of success in the brokerage community, and a good broker is a lot better than a bad broker, but I had a lot more trouble pitching myself as a service, and maybe because I wasn't a good broker, than I did demonstrating the value of an investment that I thought is a strong investment. And a lot of it as well. So on the individual level, one of the real things in my maturation as a salesperson is to not try to be a salesperson, but to be almost an educator. So at Wilshire Finance Partners, one of the partners of that firm is the founder of Lear Capital, which is one of the largest gold and silver sellers in the United States of America. So he has sales. I went through basically his sales training program, and a lot of it is you qualify initially. So when somebody calls on the phone and says, "I heard your radio ad, I'm interested in learning more." So basically, my goal is to get to what is it specifically that you're looking for. Because back when I was at Wilshire, if they were looking for a high growth real investment with appreciation opportunities, then if I could get that out of them in the first 5 minutes, I would know that what I was offering wasn't a fit for them. Conversely, here at Trion, if that is what somebody's looking for, then I know I am a fit for them. But if I ask specifically, what is the most important thing you're looking for in an investment? If they say, I need consistent income out of the gates, and I have very little tolerance for risk, then I would probably say, we may not, as much as I believe in what we're doing, if that's what your criteria is, we may not be the best fit for you.
All right. So then you've been at Trion for a while. You moved over to Trion, and
4 years as of today.
Is it really? Congratulations! That's really cool. All right. Well, it's a great way to mark the occasion. It's a coincidence. So, all right. So you move over to Trion, and it's getting close to 2 years ago that I started working with you guys, building out the digital presence, right? The online presence and the marketing. So one of the things that you have said to me is that now when you speak to somebody, they are, and I'm quoting you if you don't mind me doing that, more advanced in the sales process. So tell me what that means in the context of life before having a solid digital presence for the company and after?
So yeah, I think we were fortunate enough to work with you, starting 2 years ago. And with that, what I mean when I say that is, like, when I speak to somebody now for the first or second time, usually they will have seen communication from us. So it's almost to automate the education process. So every time somebody wants to get a piece of information on Trion or learn about our investment opportunities, they don't require a warm voice to walk them through that. So when I do become that warm voice on the other side of the phone, most often they may have received 3 or 4 educational pieces on us explaining what a gross rental multiplier is, or what the tax benefits of investing in real estate are. So, and then if they receive that communication, then they may go to our website and read about our company. So one of the benefits of, implementing a program like we did with you is, say, if somebody first decides they want to invest in real estate, they're 0%. When they decide to make the decision, they're at 100%. My first interaction with them since implementing, a robust investor communication system is now when I first had my first warm touch with them, as opposed to them being 1 to 10%, they may be at 50%. So they still do want that personal interaction. They want to make sure I'm responsive. If they call me, I'll call them back. Or, if they want to walk through a deal, that we'll be here and be responsive to them. But, that initial information gathering they're further down the line.
And in the course of your time at Trion, I know you guys have done a lot of crowdfunding, both directly and also on some of the platforms. Have you had occasion, or have you seen investors actually invest without a direct interaction, without a personal interaction with anybody?
It has happened. It's usually, it's not, it has happened. Oftentimes the people that need the least are usually the least handholding, are oftentimes recommended to us by long-term investors. So, Adam, if one of your good friends was like, I've invested in 6 deals with this company, they've made me money, like I want to introduce you to them, you may need, in that scenario, you may need less formal interaction than you would if you just click on a Google ad and you don't know this company from anybody else. So I think, usually our warm referrals are probably a little less skeptical, just because they know people that we've done well by. But, if you're Googling a company and a real estate investing ad comes up, chances are you may want to do a little more.
It's a bit different, exactly. Or a Facebook ad. We actually just I just ran a Facebook campaign, and believe it or not, we did actually get investors who went all the way through and invested.
Great.
Within 4 weeks. Really crazy velocity. But let me ask you, so with those people who come through a referral, obviously referral is always good, but to what extent do you find the extent to which you have educational materials on your website, that you have videos on your website, that LinkedIn, Twitter, Facebook, etc., they go to your feed, and I know it's slowed down a little bit over the last few months, but if they go to your feed, they see this velocity of information that's out there. Does that also help? Do you think it in the sense that somebody says, oh yeah, thanks for the introduction to Trion. What do? The first thing they're going to do is they're going to go online and they're going to research.
Sure. Yeah, we've done that. All of that helps. Basically, anything that you can put in there to validate you as a company, doesn't hurt. It all helps. And I think some of the stuff that we've tried to do as well is, when I first started Trion, and obviously we've grown as a company, we've become much more, I would say, institutional in our approach and our scale. But one of the things that we've wanted to do as well is every time we sent out an email, we didn't want it to be, hey, do you want to invest with us? So we've really tried to build out education, an education platform. So if you go to our website now, you'll see some videos, a lot of articles about real estate investing that aren't meant to sell you to invest with us, but are meant to educate you on investing in private real estate. So, when there is an opportunity to invest, our network will be better informed.
And then when you do have those conversations with people for the first time, you said that they're more advanced in the sales process, but you find a number of times that you have to manually communicate with them on the phone or in person is fewer? Are they easier to close? Let's put it that way.
That's I guess everybody's different. There are, I'll tell you what it does. It creates a funnel without having to manually work, which, we've had investors, I've had investors reach out, fill out our contact me form on our website, and I'll go into our ConvertKit account, which is the email software that we use, or the email system that we use, and I'll look at them and I'll see that they've received, 70 emails from us. And they didn't open the first 20 emails, but then the last 40 emails, they've opened every single email. So while I don't know who this person is when they initially fill out that form, having that communication, that email system in place, has kept them engaged. If they've opened 40 of our emails, and they've probably clicked on our website and read about potentially who I am, who Max and Mitch, the two founders, are, looked at our strategy. So it's really about trying to build that, number one, a lead funnel. So how are you getting interested people into your universe? Then number two, once you get them into your universe, how can you provide value to them? So it's ultimately getting somebody into that funnel and then getting them comfortable to invest with us. Is if we just send emails saying invest, that's not going to work. It's going to be, you want to provide value to them in any way you can, whether that's a video on a deal or educational content or inviting them to a webinar. That's something that, we want to provide value. And even if it's somebody that doesn't end up investing, but they, are engaged with us, that's a win for us as well, because they may tell somebody else.
It's interesting you say that. This is something that we dealt with, wasn't it? And you've referred to it now as this idea of, I'm going to put a little bit of words into your mouth, but you basically talked about the difference between cold and warm leads. And I'm not what I mean by that is the way that they are categorized inside an auto responding email system. So you might have a list of people who have not interacted with emails over a long period of time, right? So it might be a year. And the question is, do we continue to contact these folks? Do we continue to send them emails? And then what you've told me in the past is, yes, we need to do that, because investors, they might not invest in the first deal that you have available. They might not invest in the second, the third, or the fourth. They might show up just at a certain time in their life. And because you've been there, you're the one that they'll invest with. Talk to me a little about that dynamic, because we had some struggles with that, didn't we? How do we deal with these folks?
Yeah. So I'm the guy that wants to email everybody. I don't want, and
by the way, I have to tell you, listen, Andrew, I have to tell you, I am an advocate for your angle on this. I think it's absolutely true.
The last thing you want to do is obviously, spam people and be annoying and email people that don't want to be there. So, one of the things that we did, and with your help as well. So in our email system, it considers a cold subscriber anyone who hasn't opened an email in the last 90 days. So so when we were scrubbing our list, you don't want to email people that consistently don't open your emails, because that hurts your delivery rate and all of that. But I've also spoken to many people that hadn't opened emails from us in 90 days, and they were interested in investing. They just hadn't opened an email in a while. So what we did is, and you helped facilitate this, we had them go in and and extend that cold period from 90 days to 180 days. So, we cut a good portion, a bunch of people that weren't opening off the list, but we didn't go quite as draconian as knocking everybody that hadn't opened an email in 90 days off the
Right,
list.
but
So
tell me about that. Because I remember you saying that I remember you pontificating one day and saying, yeah, you know what? This guy invested and he's been on the list for 4 years and hasn't done anything. Like guys from ages ago, like when you, right? So what is that? Talk about that. The note I wrote down to ask you specifically is the life cycle of a prospect before they become an investor. Tell me what you've seen. How do accredited investors actually make those decisions?
It really does span the spectrum. Like I had an investor recently, since they started getting emails from us, they were waiting to see a deal that we had initially sent out come full circle. So they wanted to see a deal that they cataloged hey, invest in this deal, we're expecting a 16% return. And they wanted to see the exit email 4 years later prior to making an investment decision. And then, you compare that with, we've partnered with a couple people that run like a doctor investment blog for real estate investing. And he recommended one of our deals recently, and it's a strong deal. We're very confident in it. But literally, as soon as he recommended it, I just have people filling out subscription documents that I've never even spoken to. And so, they have that, and the doctor himself is an investor of ours, so he's very comfortable with us. But they, in that scenario, they have so much faith in him, and he's a smart guy, and he's recommended a good deal. But, they had that trust level to move pretty quickly. So it spans the spectrum. And, I would say, people have their different pain points for what motivates them. Some real estate people, want to look at the actual deal metrics. They want to look at the PPM, the financial projections. Whereas I would say more of your, accredited investor that's, probably, intelligent because they've been successful. They've made some money and had success, but, they're not going to pick out the nitty gritty between your year 2 and 3 growth assumptions. And that's what makes them invest or not. It's more of a comfort level with the sponsor. We always say, it's not just us who say this, but, when you invest in a deal, you invest in the sponsor as much as the real estate, because you could have, a Class A property on Rodeo Drive in Beverly Hills, and if the sponsor doesn't know what they're doing, it doesn't matter where that real estate is or how pretty the building is. So, yeah,
it's like the idea of it's better to invest in I think this is Buffett. I'm quoting somebody far brighter than me, but it's better to invest with a Class A sponsor on a Class B deal or a top sponsor on a mediocre deal. There's the special.
Sure.
Than a mediocre sponsor on a great deal. You're better off doing it that way around. But let me ask you this: what in terms of the? So we're talking about investors. What are I know your title is something different. I did tap it down. Director of Capital Markets. It's the investor You're at the sharp edge of investor relations at the end of the day. What are the most frequently asked questions? If you could, what are the top 3 most frequently asked questions of investors during the conversion process? And I'm talking about people who are currently prospects before they become an investor, not prior investors.
Have you ever lost anyone's money? How much do your partners invest in your deals? And when do distributions start? I just picked those off the top of my head, but those are, if they're not the most 3, those are 3 that we get very frequently.
Gosh, that's something that should go into the initial in the initial sequence of emails when someone signs up. Then those 3 answers, those should be here's our FAQs. There's the answers.
It saved me a lot of time.
I'm quite serious about that. So what
Yeah,
are the
no,
most
for sure.
what are the most challenging? Obviously, you know how to answer those well. Describe a challenging question to me that you have to handle.
I would say the most challenging question is explaining our waterfall, because investors receive an 8%, or when do I get my money back is another question, and that depends on the deal. But explaining the waterfall. So the way we structure our deals typically is we have an 8% preferred return, and then it's a 75-25 split, 75 to the investor, 25 to Trion, but there's a manager catch-up in there. And that catch-up makes it a true 75-25 split. And the catch-up, we put our catch-up in prior to return of capital. So, in our opinion, it better aligns us with our investors because we're not, incentivized to sell deals as quick, to churn the portfolio and sell deals so we can get into our promote. It allows us to kind of get paid along the way. And if it is in the best interest of the deal to hold it for 5 or 7 years, it enables us to do that versus if we don't get paid until investors get their pref and their capital returned in full, then it heavily incentivizes us to buy, renovate, and sell because we won't participate in any of the cash flow until essentially we sell the property.
Right.
And we do have a clawback in there as well. So in the event, if we can't return capital in full, we have to pay back any catch-up that we would have received. So,
and that's just the challenging concept to explain, isn't it, Andrew? Because I know we actually wrote, I think we actually put an article on the website, and we actually covered.
Yeah, we did. I think it was, and I believe it was titled "How a Catch-Up Better Aligns Your,
Yes.
a sponsor to his investors," and especially. When we started as a company, we were buying smaller deals. I would say, that in areas we weren't as long-term bullish on, whereas now we're buying larger assets that cash flow after renovation that are in areas that are high growth that we think it makes sense to hold deals for longer term. So in our opinion, having that in there better aligns us with our investors because it doesn't incentivize us to sell in order to get paid.
Now, we also worked on two different perspectives, didn't we? The fund and also individual deals. And
Sure.
It's harder to raise money for a fund than it is for individual deals. Tell me a little about why you think that's the case.
Yeah, that's kind of one of the constant back and forths we have as a company. And, real estate by nature is just a deal-driven industry. So, people like looking at deals, looking at the financials, looking at the appraisal. And, we as a company in 2016 launched our first fund. And our investor base, so we have about 500 active investors currently. And that consists from people investing as little as $50,000 up to, we have institutions with tens and $20 million with us. But the overwhelming majority of our investor base is your high net worth individual that's investing anywhere from $50,000 to $500,000. And so we launched our fund in 2016. Our first fund, we're now on our second fund for really two reasons. Is number one, a lot of our investor base, they're smart people. They want exposure to high growth, commercial real estate, but they'll be the first ones to tell you that, they don't have the expertise to pick deal X in San Leandro versus deal Y in Beaverton versus,
Right.
A deal in Hayward, California. So number one, by moving to a fund model, not exclusively moving to it, but by offering the fund model, we offer our high net worth investors the ability to basically spread their investment over a pool of 8 to 12 properties in diverse geographic locations. So number one, it immediately lessens their risk because it's naturally diversified. And then number two, for us as a company, if we're buying a deal with a $12 million equity check, raising that and collecting $150 to $100,000 checks is just very cumbersome. It's 100 PPMs, 100 accredited investor verifications, 100 checks.
But my question, I'm going to jump in, so I get that. But my question, why is it harder, do you think, to raise money for the fund than for individual deals? Is it because...
Okay, so the reason it's harder because there's the element of that you don't know what you're investing in. And that's really what it comes down to. Specifically early in the fund, like we incentivize earlier investors in our fund with a higher preferred return because, when we first launch a fund, we know that we're going to be buying, probably 8 to 12 properties. And we narrowly define, the type of properties and the markets that we'll be in, but you still don't have the ability to look specifically at the deals you're investing in. Later in a fund, like where we are currently in our second fund, we have 7 investments and we're under contract on 3 more properties. So, if you're an investor now, you can specifically look at what you're investing in. Early in a fund, that's typically one of the bigger hurdles. Is just an investor doesn't have that comfort level seeing exactly what they're investing in. We try to mitigate that by incentivizing earlier investors with a higher preferred return and also having very narrow parameters of our fund. So we're not buying retail, we're not buying office buildings, we're only buying value-add multifamily in very specific markets. And I think a lot of it as well is investor education. We have quite a few investors initially that do not want to go the fund route. And I think once we explain the merits of the fund, oftentimes, we can convert them. Because in my opinion, for somebody that wants passive exposure to commercial real estate, it's, in my opinion, a better investment just because a couple of reasons. You're naturally diverse because you're $50 or $100,000 spread over 10 properties. And in our fund, our promote or our carried interest, so basically our 25% upside, is crossed over the entire portfolio. So what that means is in the event 2 of the 8 deals do poorly and, heaven forbid, lose money, Trion's profit on the deals that go well will go to offset investor losses on the deals that did not go well. And when you invest directly into specific deals, each deal is its own transaction. So, Trion's profit on the good deals would not go to offset any investor losses. But
Andrew, I love that. No matter what we talk about and how I try to keep it focused on digital, I love that you're pitching all the time. I mean, that's what I love it. Let me ask you. So here's the thing: when you move to the online world, as you saw Trion did, was there a concern that somehow your secret sauce? I hear this in case. I don't want to share how we do it. Our secret sauce with all these people, 500 people we're sending detailed information to, pro formas, right? Analytics, et cetera, et cetera. How do you react to somebody, a sponsor who is concerned about that? How did you deal with that?
I mean, we're pretty much an open book. We have, I manage, our CRM and, we use Juniper Square. We get quite a few sponsors that try to get access to our investor information, to see what we're up to. And, we've never had a problem sharing information. I think it's no secret as to what we're doing. We're trying to generate new investment leads. We're trying to nurture them. We're trying to buy great real estate deals and ultimately, build our acquisitions pipeline and build our investor base like that. It's no secret as to what we're doing. It's just, hopefully we can do it better and I'm not saying we're doing it the best because I know there's some other groups that are doing it really well, but, hopefully we can do it as well or better than the competition.
Exactly right. There's no secret. It's just how well you do it, right? It's like you could lay it out and somebody still wouldn't be able to execute in the same way, right?
And I think one of the things that, and I'm not saying that we're the only group like this, but I think we have gotten feedback from a lot of our investors, seven-figure check writers and $50,000 check writers, that we're extremely accessible. And, that's not just me, as the guy that is handling all the inbound phone calls and inbound emails, but it's also Max and Mitch, the two partners. If there's somebody interested in investing $50,000, Max will be just as willing to jump on a phone call with them to give them a comfort level that he's the managing partner of the company, as he would be somebody willing to invest $10 million. And similarly, I handle our IR, and I know enough to be dangerous about all the financial information on our deals, but I'm not that guy that's nitty gritty in the model. So if somebody is looking to invest in a specific project, Farhan Mahmood, our managing director of acquisitions, is always willing to hop on a phone call, walk somebody through the model, what the assumptions are. If rent growth is 4%, or we usually don't model out 4%, but if rent growth is 2% instead of 3%, how does that affect the deal? Things like that.
Andrew, it's such a pleasure talking to you. Thanks so much, and congratulations on your fourth anniversary. Yeah, let's wrap it up. I love talking to you, and I love recording it so I can make some nice videos for you. But let's go ahead and rapid fire. I have 3 questions that I ask everybody just to wrap up with.
Okay.
And then actually I want to tell you something about fund structure that I discovered on a prior podcast. You may not have heard, but we'll do that offline, right? I'll tell you that offline. So the 3 sign-off questions that I ask everybody. What is, for somebody, for a sponsor who doesn't have a good online presence and is thinking of syndicating their deals online, what would be the most important thing they should keep in mind?
To hire Adam Gallard.
You're hired. All right. Well, I should just leave that at that. All right. I'll leave that right
No,
now.
I mean, I think, communication. Don't only contact your investor base when you have an investment for them. Try to provide value in any means you can. And then just, stay engaged. Like some of the stuff, it's tough right now, obviously, with coronavirus, but, we hold in-person events in Los Angeles. We had our first one in the Bay Area this year. And, we do lunches. There's nothing like hearing a warm voice or sitting across from somebody to build trust. And then also, don't just be in touch when you have a deal, but try to provide value in any means you can through education or whatever.
Second question. So and now we're talking about the online world, right? Strictly online. So personally, what's been the hardest lesson you've learned online?
That's an interesting question. I think for us, I don't just think this is us, but what is the best way to generate warm leads via the internet? I feel like we've been constantly improving it. I feel like we're finally getting to the point where we're really going to hopefully get it dialed in. But you can spend a lot of money on internet marketing, and if you're not doing it well, you won't see a lot of results. So I think one of the hardest things for us is really to make it efficient, make it effective, and then number 2, get the tracking systems in place so we know exactly what we're converting versus what we're spending. It's also one of the difficulties of that, as we discussed it earlier. We could get a great lead and they may not invest for 4 years. So you constantly want to be evaluating what your NOI is, spend versus conversions. But one of the challenges is that not every future investor is going to invest in the same quarter that they click on your pop-up ad.
Perfect. Last question. I know we've got a hard stop as well. What are your personal key daily habits that make you successful online? Personal habits.
Just making sure all of our data is correct, making sure the data is flowing through to one another. So if somebody signs up in an investor, fills out an investor lead, we're in a transition phase right now. So ideally that data automatically flows into the email system. They start getting the drip campaign. We're in a transition phase right now. So there's a bit of manual data entry that I need to make sure I stay on top of so that we're not losing any potential, inbound leads. That will become automated at first. I mean, eventually we're just in a transition phase because we recently switched investor management software recently switched software. And then, just trying to stay up on my email. There's some mornings I get in and I'm like, and the last thing, one of the things we talked about in this podcast, we always try to be accessible and available. And that's, in my opinion, especially to somebody that may not be a warm referral, being able to be accessible to them is hugely important. So I always try to, and I'm not saying I don't miss an email or a voicemail here or there, but we as me and then as a company try to be as responsive as we can be.
Andrew Lucas, Director of Capital Markets, Trion Properties, an enormous pleasure. Thank you so much for being on the podcast.
Thank you, Adam. It's a pleasure.
That was Andrew Lucas, Director Capital Markets at Trion Properties. Everything Andrew talked about is based on the work that he and I have done together building out their investor acquisition system. It's a system where, as you heard, investors find you, not the other way around, and want to invest with you before you even ask them, making your life that much easier. Find out more about that by signing up for my newsletter at gowercrowd.com. And I'll send you links to some free training on how to put the whole thing together yourself. That's it. Thanks for listening. And thank you, Andrew Lucas, Director Capital Markets at Trion Properties. It has been an enormous pleasure working with you. You are one of the hardest working people I know in the real estate industry, and always in good humor and with a smile on your face. You are the epitome of what Trion stands for. That's all for this episode. I'll see you next time. And in the meantime, stay well. And for now, this is Dr. Adam Gower signing off.